Obviously, if they've got $2 million cash, if they're competing with somebody who's only got, a million, 1.5 that wants to do retained equity or whatever the
Yep.
case, they can get a much better acquisition price, which only helps investors. So we tried to build this model for a lot of different reasons.
Welcome to the Next Level Income Show, where it's our goal to take your income, your investments, and your life to the next level. I'm your host, Chris Larson. If you haven't yet, get a copy of our book for free at our website, nextlevelincome.com. That's www.nextlevelincome.com. Just click on the book link, and I'll even send you a copy if you put your address in. On today's show, we have Kyle Kuderewski. Kyle is the operations manager at WebStreet, an investment platform allowing people to passively invest in online businesses and digital assets. Kyle's an engineer turned investor entrepreneur. Prior to joining WebStreet, he worked in an engineering role for nearly 10 years before leaving corporate America. He saved his money, began investing in real estate, and now owns multiple vacation rentals. He also became passionate about investing, and in a roundabout way, this led him to the online business world, and he hasn't looked back. He has a true passion for life, and his free time enjoys pretty much anything active, including triathlon, snowboarding, traveling the world, which we'll talk about a little bit today, scuba diving, and much more. Kyle, great to see you again. Welcome to the show.
Hey, Chris, thanks for having me. Happy to be here.
Yeah, no, I'm happy to have you. And we've done some work together as we were catching up before the show. My first question was, where are you? And I'd love for you to start off, share a little bit about your background, but you have really built, really consciously built a lifestyle for yourself. I'd love to share a little bit with you about that with the audience, if you don't mind, just kind of some of your recent adventures that you've had.
For sure. Yeah, let's start on a fun note. And I think that's a perfect way to do it. We kind of back into how I got here. But right now I'm in St. Simons Island, Georgia, which is where I reside. So it's a great place in America. It's a little not as interesting as where I normally am or partially am. So we can talk about my lifestyle, but the gist of it is my team is a small, fully remote team. And because of that, we have team members in Egypt and Portugal, Thailand, all over the world. It builds a great culture, but you can't do all the work you want to do remotely, or at least not. So once or twice a year, we'll get together somewhere fun in the world. So I've been home for about a week now, but prior to this, we're recording in March, spent January and February in South America. So did some hiking in Patagonia, met the team in Buenos Aires and did some strategizing and spent some time in Colombia as well. So that's the most recent ones. But yeah, we have a lot of fun doing that and we get a lot of good work done as well.
That's awesome, man. No, I love it, and I love to explore most of the time these days. I'm taking my kids with me and doing those sorts of things. So yeah, I'm a little envious when I hear about some of your adventures, and I look at some of the things that are going. My boys are right in the thick of team sports and different things like that, but we still get to travel, and they're actually they're in a school. They're both heading to Costa Rica with their school for a little adventure and service trip. So they get to explore the world internationally too, which I think is so valuable. I love that.
Yeah, that's great.
Taking
Costa
advantage
Rica
of
is a
that.
great place for remote work as well. I think we have a team member there right now, but you're 100% right. I mean, it gives you a lot, it really widens your mindset and there's just a lot of advantages to seeing other cultures and getting out there and exploring.
Yeah, absolutely. So we're going to get into what you're doing right now, Kyle, with WebStreet, but we share something in common. We both have engineering backgrounds, which I know it's hard to read on the wall behind me here for those of you that are watching, but we both have engineering backgrounds. And one of the things that I get asked most often when I'm on a podcast is, hey, like what did your engineering background bring to what you currently do? And I'd love to ask you the same thing, Kyle. Like, do you think it's helped you in your progress with your current business? Some people, have a stigma around engineers, like we're not good with people or good with conversations. And I've certainly had to work on my writing skills, which didn't come as naturally as say math, for instance. But what's your experience been, both through your education and also how you've been able to apply some of that in your current business?
Yeah, I think everything you said there is pretty spot on. So I'll try to hit on each of the points. I mean, and mine are on this wall, so you can't, but looks similar. The first thing would be just in undergrad, engineering really drives home perseverance and problem solving. So I think that
Yes.
would be the biggest thing. I don't use a lot of the technical skills I did in undergrad or used in undergrad. Some of them I do from time to time, but not so much. Generally just learning to persevere and like when problems get in the way, dig in and don't let them slow you down. So that's huge. I
Nice.
did do my master's as well, which was in engineering management. That was probably more relevant, not probably, definitely more relevant. It was
Yeah.
more on project management styles and managing teams and managing people and different personalities. So that is pretty relevant. Um, and the last point I'll kind of hit on, you said there about not being good with people. I mean, that stigma is kind of true. I think it's something that I realized early on in engineering school was like, hey, you might have the technical capabilities. You're definitely not the most technical savvy here in the classroom, but you have a skill set with people that you should try to leverage. And so that kind of always in my mind when I got into the corporate engineering world and kind of the reason I'm in the spot I am today.
Yeah, I always joke. I tell people, and some people believe me, which is just as funny. Say my advisor pulled me aside one day and said, "Chris, um, you're not smart enough, and you have too much personality to be an engineer. So we need to look for a different path for you. So like maybe something like sales or something like that." But all joking aside, um, it is interesting. You look at engineers, or I got to work with surgeons, neurosurgeons, orthopedic spine surgeons. And, it's rare to find a mix of somebody that's like hyper smart, like really, really intelligent, and also has, really good interpersonal skills and those sorts of things. Almost like, there's only so much room in our brain. But
Certainly.
again, joking aside, for me, and I'd love to hear your experience. You mentioned like persevering through problem solving. When you're faced with a problem in engineering, there's a process that goes along with it. And, the first step is make assumptions, then you solve the problem, and then you iterate. You kind of go back and you go through it over and over again. And for me, running through that process repeatedly, especially in problems that there wasn't a ready solution, or sometimes, there was multiple solutions, depending on. I think that lends itself very well to business and also into life these days, because one of the things I find, Kyle, is people have the wrong assumptions.
Yep.
And um, what's his name? He wrote Nassim Taleb wrote Anti-Fragile, and he
Mhm.
he talks about this, and he not in the same way, but he calls these people intellectuals yet idiots, and basically people that are very smart, they're very well educated, and that's funny. You got your little bubbles. You agree with me almost. Um, but these people are very smart, they're very well educated, but essentially they made the wrong assumption. So their conclusion in the world is wrong. And to me, that's what I always tell people. The biggest benefit I got from engineering was that I learned how to solve these problems, but I also learned to question my assumptions.
Yeah, yeah, and I think it's well said. I won't add a ton there, but
Yeah,
you almost read my mind. Going back to first principles, so building those
yes,
assumptions on the first principles and tearing down other people's assumptions or their worlds, and really getting to like what you think the first principle is, and then working through the process like you said from there is super super important and not easy to do even with training.
yeah, that's a good point. And you got to be careful, because if you challenge somebody's assumption, um, especially as my wife would remind me in like politics or religion, you're probably not going to get a great response right away. So you got to be you got to be careful how you come at people. Maybe that's the interpersonal skills, like I was joking about earlier.
Yeah, for sure, for
Yeah.
sure.
So we were talking about your pathway. So engineering to WebStreet and investing in alternatives and businesses like that. But you came about it in something that we also share, which is short-term rentals. So maybe you can share kind of like that next step in your path. So you left your engineering education. You did a master's degree as well. Walk us through what was the next step in the corporate world, and then where did you go from there?
Yep. So, graduated college, was relatively broke, like most of us are when we get out of university, and accepted a corporate engineering role that treated me well for between 8 and 10 years. Gave me a good start to life, taught me a lot of skills, but I always knew there was something more I wanted to do. I had an entrepreneurial itch, so
Yeah.
um, got money. I knew I wanted to get into start a side hustle so that I could one day leave. I didn't know what that was going to be, and actually just started a room in my house shortly after my wife and I purchased it, just because again we used most of our money for the down payment
Yeah.
on Airbnb, and we did it in a halfway manner, little to no effort, and it was starting to rent out every weekend. And we were like, okay, this market here, we live fairly close to the beach.
Yeah.
This market's really there's something. So
Yeah.
followed that market trend and ended up purchasing a vacation rental duplex, which we still run today,
Yeah.
and it's been a blessing for. at that same time, I was looking at a bunch of other side hustle options, right? It didn't have to
Mhm.
be real estate. I didn't know what it was going to be. And that's when I learned about the world of online businesses, a brokerage called Empire Flippers. And
Yeah.
yeah, I looked at purchasing a site or sites and running them, again, because I wanted to develop a lifestyle where we could travel together and I could
Yeah.
work remotely. And didn't end up doing that, but I kept an eye on that space. And we can to what WebStreet does and what I do with WebStreet now. But
Yeah.
that's what eventually led me to Empire Flippers and the WebStreet and just the world of online businesses in general.
Yeah. No, I love it. And it's we have two short-term rentals here in Asheville, and people are like, wow, like why would you want to have short-term, renters or Airbnbs on your property? One's a midterm, one's but what we found is like we didn't have somebody like necessarily in like a bedroom next to us, but it's on our property, it's in our house, and it helps
Yep.
really pay the entire mortgage, which is great. Um, what year was that you guys started doing that, Kyle?
That was 2015, started 2016, and then we bought
Yeah.
the rentals, the actual ones we own now,
Yeah.
in 2018. So it's
Yeah.
been 5, 6, coming on 6 years now. It's been a good while. I think we
Yeah,
have
so you're
over a
ahead of the
thousand
big.
reviews and stays. Yeah,
Yeah,
we a bit ahead of the curve
yeah,
and all that.
I love that. No, it's a great business, and again, I think it's if you're listening and you're trying to figure out like what's your first step into the world of real estate, like do I buy a single family rental? I think short term rentals, wow, it's a little bit more work, it's a little bit more operations. The profit is there,
Yep.
and you can. I've had multiple coaching clients. They rent a basement, or they have basically a duplex, whether it's side by side or above or below, or they have a house that they rent short term on their property, and they subdivide it and build a house on there. There's so many different things that you can do, I
Yeah,
think.
100%. And I should have been, I was trying to be concise, but our
Yeah,
actually is like a mother-in-law suite over the garage. Our garage is slightly
yeah,
separated from our house.
yeah,
So, not that there's nothing anything wrong with doing a room in your house, but if you
yeah,
don't want somebody in there, there's a ton of different ways to do it, like you just mentioned. And
yeah,
we actually don't rent that anymore. We just let family and friends stay there. But
yeah,
it really proved to us like, hey, this market is something that you should take advantage of. I always try to listen to the markets if I can, especially
yeah.
when they're kind of knocking on your front door.
Yeah, absolutely. And I think, one of the things that I think is going to be really big going forward from a demographics perspective is this silver tsunami that we hear about. And, we have, and people have heard, 10,000 people a day turning 65, but those same people are about to start turning 80 every day. And when you're
Yep.
turning 80, you typically need some sort of assistance in your activities for daily living. So I think to me, somebody that, is whether they're building out their house now or looking for kind of to future proof their home, kind of like we did, it's like, well, hey, if we ever have a family member that needs to be close by, we have that option. So I think if you're building a house or you have a home, it's something that you could have a short-term rental now in your property, but you can also make your property more valuable for the future when we're going to have this again, what I think is really going to be a crisis in this country of how we're going to care and house, our senior population at some
Yeah.
point.
Yeah. I couldn't agree more. We could talk probably for hours about that. I've got
Yeah.
some relevant things going on in my life right now, and also
Yeah.
in the area that I'm in, a lot of coastal towns have
Yeah.
older populations, so I'm seeing
Yeah.
different models built, more innovative models built with different ways you step into graduated care, et cetera.
That's right.
But I couldn't agree more.
Yeah. No, I think again, so if you're listening, write that down. That's my prediction for the next 10 years about an area that's going to be very popular. Um, But one thing that people that are highly wealthy have in common, typically, Kyle, is that they own businesses. And this is why wanted you to come on because, when you started with the Rockefellers and the Vanderbilts and, businesses a decade and I'm sorry, a century and a half ago looked very different than they do now. We have franchises now. We have online businesses, and even like real estate. Like I would call real estate, even an apartment building, it's a business. If you have
Right.
100-unit apartment building, you have 100 clients or customers that are paying you or have almost like a monthly membership that they're staying. So all these things are businesses. Why did you choose, and what type of businesses did you choose to focus on when or why did you choose online businesses? And what are the advantages that you found with that? What's the evolution been?
Yeah, to me, it feels like to everybody the internet's been around forever, but if you compare it to like the time frames you were just talking to, I mean, it's
Yeah,
still early in the game.
Yeah.
I still, of course, love real estate. I'm not never just get completely out of real estate. I think it's an excellent asset class. But I saw a lot of opportunity online in online businesses, and I'll specify a few of those examples. So, Fulfill by Amazon, otherwise known as
Yep.
Amazon FBA,
Yep.
Amazon
It
Kindle
just had
Direct
it
Publishing.
just had a guest on Neil Twa. I mean, I think the podcast actually aired today
Okay,
with Neil. So if you're listening, check that out. Neil TWA, like the old airline for those of you that are my age and older. And he talked
in the
exactly
Amazon
about that.
space.
Yeah, the FBA, exactly. Yeah.
Awesome. Yeah.
Yeah.
So I'll give that a listen as well.
Yeah.
Yeah, so FBA, Kindle Direct Publishing is much smaller, but very profitable monetization. All of these sites, we call them content or affiliate sites. So if you're going and
Hmm.
looking at top 10 travel backpacks or top 10, whatever the case is,
Yeah.
or just reading blogs, all those affiliate, you're clicking those links. If you make a purchase, that person's getting paid. Um, and then, of course, the big one is SaaS. So we do software as a service. Could anything not quite as big as what we're talking on here, Zoom, but there's tons of softwares we all use. I know we know HubSpot, we know Monday.com, we know all of
Yeah.
these, even the $1 a month apps on your phone. Those are all what we consider online businesses without
Hmm.
physical assets.
Interesting. Yeah.
And there's a lot of opportunity there. It's still very early. A lot of people that are visiting these sites don't even realize that they're being monetized. And so
Hmm.
what we do at Empire, like a brief background, Empire Flippers is a brokerage for online business. You all know what a brokerage is. If Chris builds a site and he wants to sell it, and Kyle wants to buy it, he might go to a place like Empire Flippers. There's other places like that too. But what WebStreet does, and what really made me want to leave my corporate role, is we make it possible for people to invest passively in these websites. So somebody that doesn't have a clue how to run a website, how to buy a website, how to code, how to do whatever, manage inventory, they can invest in these same exact websites through our company, the way you would, real estate or art or wine in a fractional
Oh,
manner.
wow.
It's like a SPV type model.
That's
So
awesome.
that's what me and I actually looked at investing in the websites, and then I didn't pull the trigger. I decided to keep the savings and then join this team and start this branch of the company.
Yeah, I love it. So, yeah, I mean, this is to a lot of people, this is it's kind of mind blowing, right? Like a lot of people have heard of business brokerages. If you haven't, I've talked to several business brokers over the years. If you say, "Hey, I'm looking at buying, a business," just like if you're looking at buying a piece of real estate, you talk to a broker. They'll say, "Hey, these are the options that are out there. We've looked at everything from in-home services to restaurants, to oh geez, I can go on
Oh
and
yeah, I
on,
mean,
healthcare and those sorts of things. What are you seeing in the online business world, and kind of compare and contrast that to, for instance, like a franchise, Kyle, or a brick and mortar. Are the numbers similar? How scalable are these? What are some of the challenges, et cetera? Are you a high income business owner or professional earning 300,000 or even more a year, but still feel like you're living paycheck to paycheck? Are you comfortable working until you're 65 or 70 to retire? Or do you want to achieve financial independence and live life on your own terms? You could join myself and Matt Four and learn how we both became financially independent in our early 30s. We will teach you how to make, keep, and grow your money, teaching you strategies to maximize your earnings, keep your income that you've earned through tax strategy and legal structures, and ultimately teach you how to grow it by determining your personal investing strategy, as well as teach you how to analyze investments so you can grow your passive income to the point to live life on your own terms. Our coaching clients reliably do this in 7 years or less. To learn more, check out our coaching program at nextlevelincome.com/coaching. That's nextlevelincome.com/coaching.
yeah. So like a brokerage side, the numbers as far as multiples are a lot different. So generally, depending on the monetization, most of these sites or businesses, I say sites, they're generally could be packages of sites or what. They're much more businesses. Are trading the 4x annual or selling in the 3 to 4x annual range. So,
Okay.
if you know what you're doing, you have a team that knows what they're doing, and you come in and buy one of these businesses, you recoup your money pretty quickly.
Yeah.
Um, so that's a general like range on the numbers. Now, comparing and
Yeah, just
contrasting,
yeah, just
yeah,
for example, like the car washes we buy, we're buying, a single site from a single operator, and it's run in a decent fashion, like an express tunnel wash,
Mhm.
and it's kicking off, say, $500,000 a year in revenue, it's typically going to trade at about an 8x multiple of EBITDA, or about $4 million, somewhere in there.
Which is still
Um,
good. I mean, it's still
yeah,
good, right? Like
yeah,
and but yeah, that's it's a really good thing to point out. So those are the similarities there on the numbers. And
yeah,
then I guess we can compare and contrast some of the trends and some of the risks, right? So a car wash or an apartment syndication, some of your risk would be that, construction around what's going on in the community around it, right? Is there industry
mhm,
moving there? Is people moving to it? Or people leaving?
yeah,
Of course, physical risk with the business. Um, Generally, I think you guys do a great job with your research. Generally, that's probably more predictable than what we're dealing with the online business space, which is part of the reason for the multiple differences, right? Like
yeah,
a lot of ours are more dependent on if Amazon decides to up and change their algorithm completely or changes their search algorithm completely, then you really have to be able to adapt. Now, a lot of our operators have done this for years and years and years and 10 plus years. And they've seen many, many changes and they know how to adapt. But those are some of the risks, right? Like AI and um,
yeah,
just the rapid speed of technology. I don't want to sit here and say 3, 4x multiple without any risk because that's certainly not the case. But
yeah.
it's is that a good comparison? Do you have other things to add on the physical real estate side?
Yeah, I think no, I think that's a good point. One of the, if you look at real estate, I mean, when you really get to core real estate and those sorts of things, typically you're looking at a Class A apartment building trading at, say, a
Hmm.
five cap. So, you're talking about, that's a 20x multiple,
Right.
in that case. But you're talking about an asset that it's a hard asset that, you're talking about. You have replacement costs and those sorts of things, and you also have financing. You have high quality financing that you can get by agency backed, or basically government agencies, essentially. What does that look like? Are you typically only paying cash for these businesses, Kyle? Because that's another thing, right?
Yeah.
Um, the financing looks vastly different from a Class A apartment building to a small car wash to an online business, I would imagine. What does that look like in your space?
Yeah, that was a big reason. Another big reason we started WebStreet was not just to give investors access, but was to give what we call operators or portfolios managers access to more funds. And I'll back up there. So
Yeah.
generally on the brokerage side, when somebody's buying or selling a business, it's mostly cash financing.
Mhm.
There's obviously different seller structures, retained equity, profit sharing. Sometimes the seller might stay on for 6 months or a year and help transition. Like there's all kinds of different models there. There are some private financing options, but like SBA loans and stuff like that.
Mhm.
Banks,
Yep.
like there's just not a physical asset to collateralize. So like
Right.
there, that's very rare for those. We very rarely, actually, I don't think Empire Flippers even does selling for SBA loans anymore because they've fallen through so many times when people thought they could
Yeah.
get it. Um,
Yeah.
so what's nice about what we're doing at WebStreet is we're raising the money from investors. It is cash. The operators also put in 5% of, so if $1 million fund, they're putting 100,000 of their own money. So they do have a lot of skin in the game.
Yeah.
But maybe they don't have $2 million to go buy a business. They have skills, they think, right. They've got a good track record of
Yeah.
building businesses, but they want to go take it up to the next level and they can't get the financing to do it. Well, that's a nice way for us to give investors good returns, access to a top-notch operator, and let them go out and buy the businesses. And then the last thing I'll add, obviously, if they've got $2 million cash, if they're competing with somebody who's only got, a million, 1.5 that wants to do retained equity or whatever the
Yep.
case, they can get a much better acquisition price,
Yeah.
which only helps investors. So we've tried to build this model for a lot of different reasons.
Yeah.
So yeah, does
Yeah.
that answer?
No, it does, and I think you're basically spanning the gap between the legacy model that we've had, in, like we were talking about, where you have these brick and mortar businesses and the financing options out there, and the banks just haven't come around. The financial world hasn't come around to these sorts of models, and that's one of the things that appealed to us in the car wash space, is that there's been a lot of development in this space. We're still about, we started into it, we're about 15 years out from the space being fully built out, but 80-85% of these locations are just small mom and pops. And
Right.
we were talking, I mentioned earlier, and this probably overlaps some of your thought process as well. But if you have 10,000 people retiring a day, and 10% of those people own small businesses, there's a lot of small businesses that are just flooding the market right now. And the challenge is you don't have enough people ready to buy those businesses or enough people that have the cash ready to buy the businesses. So, I can imagine that that's an area of opportunity for investors or just people in general that are looking to go out and find a business for themselves.
Yeah, I completely agree. And, some of those businesses just kind of had a stigma for being a pain to run or whatever the case is. And that's not necessarily true now with a lot of these softwares as a service, like we were talking about.
Mhm.
You can do a lot of more automation with you can also outsource a lot more of your scheduling. And like there's
Yeah.
ways to run these legacy businesses, laundromats, cleaning services, things like that. And you can cut your team or your workload or overhead by a lot by using
Yeah.
just these softwares that are available. So I
Yeah.
think opportunity out there if people know where to look.
Yeah, and Kyle, that's what brought us together through our mutual friend, which was, we're using a system, a CRM, and trying to build that out, and you'd built that out, and I think having that engineering background appealed to me, but this applies everywhere. If you can develop scale, whether it's scaling a medical device business like I had, or scaling a small business, or scaling an investment company and those sorts of things, if you can scale, if you can apply these same principles that you're talking about, it's going to add to profitability, right?
100%. Yeah,
Yeah.
very well said.
Yeah. Awesome. So how is Empire Flippers different than WebStreet? Talk about that transition, Kyle, before we share a little bit more about how investors and
Sure.
listeners can learn about that.
Yeah. So Empire Flippers is just like I said, it's a purely a brokerage. It's a very large brokerage in the space. They've done over 500 million in businesses sold in the last 10 to 12 years. So
Yeah.
I think the largest business around $15 million, and they started out selling $5,000 to $10,000 businesses, five to $10,000 businesses. So
Yeah.
large player in space. Um, I made it sound earlier like WebStreet was born because we were so smart and we knew investors wanted this, an operator this. That wasn't the case. We continued to hear from people in that audience, in the EF audience, that can I just give you money and you run these sites for me, or can I invest in these sites? And we said no long enough to the. Finally, we were like, okay, let's follow the market trend, like I was saying
Yeah.
earlier, and let's give these people a way to invest, or these operators a way to buy bigger businesses. So that's how Web Street started. It started as Empire Flippers Capital, which was just another branch of the company. The plan was always to separate, but we knew we wanted to share resources at the beginning, get our feet under us, and and it also gave us access at the beginning to really good deal flow. So when we raise the money for these operators, they go out to anywhere they want. Basically, they can go to any brokerage, they can go get private deal flow. Obviously, we vet all the deals and make sure they're high quality. But at the beginning, they only went to Empire Flippers, and that because we knew the businesses getting listed at that brokerage were high quality. So that's kind of the difference. Empire Flippers buying and selling, WebStreet is for investing.
Gotcha. Awesome. So if somebody's listening today and wants to learn a little bit about this, and maybe you can share also, like if somebody wants to learn how they can take a look at businesses if they're interested in buying, or if like the latter, as you just mentioned, they're just interested in potentially investing in these businesses as a passive investment. How can listeners learn more?
Yeah, so empireflippers.com, super easy to sign up. If you want to unlocking businesses, all they require is they do like a verified liquidity. So this is just for competition purposes. You can't just go start unlocking people's $1 million plus businesses and seeing their P&Ls and all this stuff. But if you verify plus or minus 50% that you have, $1 million business, you have $500,000 in the bank, you can go on businesses and start seeing about if you might want to buy one. On our side, we're currently for accredited investors only. So it's very, it's self-certification. Now you sign up on our platform and then you can see all our past funds, our current offerings. We do them, pretty much have an open investment opportunity all year round now. We do them in different rounds where we group different types of businesses together. So if you invest in a fund, you're getting access to several different types of assets versus just throwing a dart at a dartboard. Um, and yeah, so accredited investors, and yeah, all the details are on there. Um, I know you would say the same thing. It's super important to get educated, to know what you're investing in. So we have an investor relations team. If you want to talk to them, they're very helpful to see if it's a fit for your portfolio or not. It's not a sales call. We don't want people who don't know what they're investing in. But it
Absolutely.
is completely passive. You're not expected to bring anything to the table. And one thing I do like about our model, and we were pretty deliberate about this, is instead of just an appreciation play, this is a cash flowing play. So these are businesses from day one, from the time we purchase them, and 2/3 of the profits each quarter get delivered to your WebStreet wallet, which is you can withdraw that money, you can reinvest it, you can let it sit there. So each quarter after the businesses are purchased, you get 2/3 of the profits to your account. And then, generally our hold period on these businesses is 2 to 4 years. So after we buy them, we let the operators grow them 2 to 4 years, their strategies, and then they'll go out to a brokerage like EF and sell them. And then you get 2/3 of the profit split there as well. So it's a 2/3, 1/3 split. And yeah, that's pretty much it. It's pretty
Wonderful.
straightforward.
So empireflippers.com, and then is it webstreet.co? Is that correct?
Yeah, .co. Sorry, to get clarification, .co.
Yeah, perfect. Kyle, it's been a pleasure catching up with you again, my friend. Thank you for sharing more information with the audience. And if you want to check out more on Kyle's company, check out empireflippers.com as well as webstreet.co. Kyle, thank you so much.
Thanks, Chris. Cheers.
Hey, Chris here again. I hope you found this episode valuable. Now, I have one more thing to gift you. We have a page for my coaching clients where you can get a free copy of my book, as well as much more from previous guests on the show. Just check out nextlevelincome.com/coaching to get a free copy of my book, audiobook, and much more. I'll send you a copy of my book and cover all the shipping costs as a thank you for listening to the podcast. Also, please like, share, and take just 90 seconds to give us a rating on Apple Podcasts.